Hey everyone, Dell reported first quarter fiscal year 2025 earnings results that sent the stock price down roughly 20% following the results. More than anything else, I think the stock price decrease was a deflation of the momentum that had built up surrounding Dell's stock. People were getting ahead of themselves, expecting Dell to deliver phenomenal performance on the back of rising demand for artificial intelligence. So this report was a bit of a letdown for those investors. Now, coming into this report, I told investors not to buy Dell stock. I warned that the valuation had gotten too expensive. And so in this video, I'm going to review the latest quarterly results and then look at the valuation again and determine if this dip is a buying opportunity for investors interested in Dell stock. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so revenue in the first quarter was up 6% year over year. Meanwhile, operating income at $920 million was down 14% year over year. Management saying that we again demonstrated our ability to execute and deliver strong cash flow with artificial intelligence continuing to drive new growth. And that's been the theme for Dell for several quarters now, is its AI business is thriving, but that's still a relatively small part of its overall business. We're going to see just how much in a little bit. But that part of the business is thriving. The other parts of the business, namely the consumer-facing business where it's selling personal computers to consumers, that part of the business is not doing so well. It's not growing as much as the artificial intelligence, nowhere near as much as that part of the business. It will grow. It's entering that replacement cycle that is causing growth in personal computer sales, but at a slow rate, low single digits. So you've got to weigh that against the AI enthusiasm and understand what you're getting as a whole with Dell Technologies. Also, in the latest quarter, cash flow from operations fell by 41%, down to $1.043 billion. That was down 41% from the same quarter last year, where it generated $1.77 billion in cash from operations. Adjusted free cash flow was also down by 9% to $623 million from $687 million. So while the company is experiencing growth in sales, those are not resulting in increases in cash flow from operation, increases in profitability, or increases in free cash flow. So I highlighted Dell has a two-sided business, right? It has the infrastructure solutions group where the artificial intelligence side of the business is housed, and then the client solutions group, and that's the personal computers that it sells to consumers. Now the infrastructure solutions group is doing well, and that segment of the business was up by 22% year over year. Servers and networking equipment specifically came in at a record $5.5 billion, and that was up 42% with demand strength across AI and traditional servers. So that part of the business is doing well. But the other segment, Client Solutions Group, generated revenue of $12 billion, which was flat year over year. And that part of the business is the larger part, right? They had $12 billion in revenue here compared with just $9.2 billion in the Infrastructure Solutions Group. So more than 50% of the revenue coming from CSG, and that part of the business was not growing. Still, Dell is hyping up the artificial intelligence, saying that no company is better positioned than Dell to bring AI to the enterprise. AI optimized server orders increasing sequentially to 2.6 billion. Shipments were up more than 100% to 1.7 billion, and backlog grew by more than 30% to 3.8 billion. Robust growth to be sure with Dell's AI business. If this is the only part of the business it had, I think investors would be more optimistic about Dell's stock than they currently are, because it's being weighed down by the Client Solutions Group, which is not growing. So the Dell AI factory with NVIDIA includes the new PowerEdge server, which offers direct liquid cooling in a 4U form factor and can support 72 NVIDIA Blackwell GPUs in a single rack, which is 33% more GPU density per node compared with the XE9680. So, of course, NVIDIA's GPUs are in very high demand, and Dell helps with the installation of these NVIDIA GPUs to create servers, and that's what's boosting Dell's AI infrastructure business. Now, the good news is that new AI PCs are on the way with Copilot Plus, and they're powered by Qualcomm's ARM-based Snapdragon chips, and those are going to create new demand for personal computers at the perfect time, because the replacement cycle for personal computers is just now getting on their way. Remember, people bought computers in 2020 and 2021 because we were working from home and learning from home, and it was no longer enough to have just one computer in the house. You needed one computer for each person in the house now, because you were using the computers simultaneously. And that created a surge in CPU purchases, but then that created a gap in 22 and 23 because these are long-lasting goods. Typically, computers last anywhere from 4 to 6 years on average. Some people use it more, some people less. But now, starting in 2024, those computers that were bought in 2020 are going to start getting replaced. And then in 2025, even more computers are going to need to be replaced. And then even more in 2026. This is what I mean when I say that replacement cycle is getting underway. And it's going to be arguably one of the biggest replacement cycles in history for the personal computer industry. So while the forecasts are for low single-digit growth in 2024, I wouldn't be surprised if the forecasts for 2025 rise to high or mid single digits, and then in 2026 they rise again to approach double-digit growth. So this relatively mature industry is shaping to generate some growth, although for a brief moment in time. This isn't going to be a resurgence of the personal computing industry where it returns to solid growth. That's not going to be the case, unfortunately. It's going to be a brief window of 2 to 4 years where this replacement cycle is going to boost growth for the personal computing industry. And then I think it'll settle back down again to its very low growth rates going forward. So even after the stock price decline, Dell is still trading at a valuation that's way more expensive than usual. It's trading at a forward PE of 14.36. You can see this stock generally trades at a forward PE in the mid single digits, or around 6. A forward PE of 6 or 7 or 8 is traditionally where Dell stock trades for. But now it's at 14, so it's at roughly twice the valuation due to the enthusiasm for artificial intelligence. So if I was to update my recommendation for Dell stock, I had it as a hold. I'm going to keep it as a hold here. I don't think the valuation decreased enough to justify an upgrade for Dell stock just yet.